Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, September the 12th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our main hypotheses for the day. We here at Quantum Leap Futures create multiple hypotheses in order to have a plan in place depending on what the market does. This does not mean we're trying to predict the market. What we're trying to do is lay out a trade plan based on what the market rotations and action is like so that we don't have to do it in real time. We have a plan in place. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There is no website, there's no blog. We do this live in the go-to during these pre-market sessions, and then we do live trading and analysis during the course of the trading day. It is not a commercial venture. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So let's go through the news first. 9:30, we've got Great Britain CB leading index. We have 1 o'clock FOMC. Brainerd is speaking. This is the one that I think is going to be the most interesting today because of the fact that with the big move that we made on Friday, it's possible that what Brainerd has to say could spark some volatility. We also have the 10-year bond auction at 1 o'clock. And then that's it for scheduled news today. Looking at Tuesday, we have not a lot of news. Again, a lot of European news overnight, so I think that tomorrow's Globex session could be an interesting one. We do have 30-year bonds tomorrow and federal budget. And then looking at Wednesday, we've got import prices, we've got crude inventories, and that's it again. Going over to Thursday, we've got major economic news coming out at 8:30. Core retail, PPI, Philly Fed, retail sales, unemployment claims, core PPI, current account, Empire State Manufacturing. This will be a big day. Then at 9:15, capital utilization, industrial productions, and then 10 o'clock business inventory and natural gas at 10:30. And then on Friday, we've got the manufacturing sales and foreign securities for Canada, and then we've got CPI, core CPI, and the preliminary University of Michigan consumer sentiment and inflation aspect. So more scheduled news later in the week rather than the beginning of the week. Of course, the big news is Friday. We had a huge trend day. We basically had one of the biggest days in I don't know how long. We had a range of 42.50 just in the RTH session, and in the full session. Sorry, I forgot to write this down already. The full session range was 58.50. So certainly the biggest day that we've seen. And we closed near the lows. So on Sunday night, we were expecting a open and then continuation lower. Overnight, we got down to the overnight low of 2,100 and a quarter. So we did get the continuation. Since then, we've bounced off of that and come back, and we're finding some balance in the 9 and 10 area. But let's just take a quick step back. I always like to start my day looking at a simple candlestick chart with a 9 EMA and a 20 SMA. What I'm looking for is I'm looking for slope and separation for the strength of the trend. where it's being challenged or violated, and then I start moving down my time frames so I can understand where we are within the trend in the different time frames. On the monthly, very strong trend for the last several years. Then at the beginning of, at the end of 15 and beginning of 16, we challenged that trend. Then we took it back and we went up and made new all-time highs. Now we've come back and we're testing the 9 EMA on the monthly, and that's down here at the 2094. Haven't quite got to it yet. But if we get below the 2100, we've got a naked cross on the monthly all the way down at 2141 and a quarter, and I'll show you why that's interesting. But right now the trend is still up on the monthly. We have not violated. When we look at the weekly, we had a bearish engulfing on the weekly, and we basically took back 8 weeks. 1, 2, 3, 4, 5, 6, 7, 8. I'm sorry, 9 weeks. 1, 2, 3, 4, 5, 6, 7, 8. I'm sorry, 8 weeks in one, basically in 1 week, but we really did it in the last couple days. And we violated the 9 EMA, and we're now just starting to break below the 20. So this is the first real weakness that we've seen in this market since that move down on the Brexit, and certainly got ourselves a huge move down and a challenge to the lower 2100s, but we did not break below the 2100. Going to the daily, you can see that the daily is taking back all this, I mean, going all the way back to the 7-11 day. We just took back so much grind, and it's nice to see some volatility come in. And we've broken below the 9 and the 20, and we're starting to get this downward trend on the daily. On the 4-hour, you can see we've got a very strong downward trend, good slope and good separation. Got a bit of a technical gap. A move up to close the gap is going to take us up into the 25 to 27 area. If we take it back through price, we go through time, it's probably going to be somewhere in around the 17 area. But we do have a weak low here with the double bottom on the 4-hour. So the trend is very strong to the downside right now. Going to the 1-hour, you can see that we have had this very strong move. We got a FUBAR Mr. Sneaky Tech Gap. They've come up and closed that through time. They're above the 9. They've challenged the 20, but they have not broken above it. So we're at a decision point whether or not we get more continuation to the downside or whether we make a retracement back up. Going to the 30-minute, we do have a break above the 9 and the 20 after a very strong downward trend. We consolidated in this area. Now we get the breakout to the upside, and we're starting to get slope and separation. There is a naked cross that they left here at 2104. 2104 and a quarter, thereabouts. So if we can't get continuation and we break below the 2106.75, I'd be looking for them to come down and take out this 2104 and a quarter naked cross on the 4-hour. I'm sorry, on the 30-minute. And then going down to the 15-minute, you can see that we do have this start of an upward trend. Got a bit of a technical gap right now, but we are starting to move up. Challenging the trend will be coming down here to the 2108 and a quarter. There's a naked cross here as well at 2103.75 on the 15-minute. And then going to the 5-minute, we've got a fairly strong trend, but now it's being challenged, and we're back below the 9, but above the 20, and we will challenge the 20 down here in the 2108 area. So very interesting action. Let's take a look at the big picture. So how can I get all this in here? We are back in this no man's land that we gapped up. We had the breakout day on the 077 of this balance that was centered around the composite VPOC, the most traded price going back to the beginning of 2013. It's all the way down here at 2035.50. That is also the microcomposite VPOC that we were in this balance zone down here, and then we broke out of that and we created these gaps here, and then created balance, accepted price higher, broke out again on the 5th, created balance higher, they tried to hold, and then they fell out of both of these micro composites, and we come back down into this very thin area where we did not spend any time on the way up. So it's going to be very tough trading, until they develop some structure in this area, and we can move very quickly through this in either direction. So, you have to be very, very careful on what the market is telling us and not getting stubborn in here, because there really isn't a lot of structure to guide us. There's no real price acceptance. There's no value area in the trend day from yesterday. The key point I'd be looking at right now is the 50% of the significant breakout candle, which is Friday, is up at 2136.75. We have a tendency to retrace up into the significant breakout candle at some point in time. Also, the 50% retracement of the move off of the 2185.50 is up at 2142.25, which is just above this 2142.50. So those two levels above are going to be important at the 36.75 and the 42.50. Other than that, below us, 2107 is going to be a key area. I'll show you why. It's the CLVN is like 2106, or sorry, not CLVN. The LVN from the Globex is at 2106.50, I believe, and we get the CLVN at 2107. Key levels below us right now are the 98 and the 88.50, and then the next big target below becomes this 20.80.25. This is adjusted. Remember, I was talking about the fact that if we did make a move down, a bigger move down, remember I was building that swing position, my target was 20.86.50. That's basically the target before the roll. When we've rolled over, so that 86.50 becomes this 80.25 on the adjusted roll. But again, going to be very interesting to trade this area. Taking a look at Globex, we're creating a double distribution zone. We opened up in the Globex at 21.15.25. That is our week open. So mark that down in your journal. Our week open is 21.15.25. If we get back above there, we're in a bullish week again. If not, we're staying below in a bearish week. And then we basically, they sold off down to 09. They tried to get back above. They failed, and they sold off again. They came down, tested the 2100, created this weak low. You can see the multiple times they came down and tested the 2100.25, 2150, 2175. This is a weak low. And it is also a week low, our week low in terms of time as well as in strength. And then we've got this double distribution, and we've got the VWAP and the LVN right here, 06, 75, and 07. So we've gotten back above it. We're creating some balance up here in around this 21.1250. I doubt we'll get a VPOC shift, but we do have time, depending on how much volume they put off coming. And we're right below the Friday low at 21.1550. So let's take a minute and put our levels in here. So our overnight low is down here at 2100 and a quarter. Our overnight high is up at 17. Getting a little bit congested here on my chart. Our 20-day ATR is now running at 1658. It's finally starting to expand rather than contract. Off of the overnight low, that puts our daily ATR upside target up here at the overnight high. It's at 1675. Our overnight high is 17. So basically, our daily downside ATR target is 2150. So we've essentially already traversed the the 20 period average true range in the Globex itself. So we've had a full 16.75 point basic move. We're going to be, if we open up where we are right now, we're going to be opening up, below the close of Friday and inside of this day with the naked VPOC at 13.25. Our VPOC right now in Globex is at 2103. And of course, we've got this LVN and what's going to be my key trade level at 2106.75. And right now, I don't have any line in the sand unless we get down here into the 2074. It's just too wide of an area, and we've got gaps in this area. We've got a lot of repair work to do here. So other than that, there's not much that can tell us what's going on in the Globex. So I'm going to move this over, and then let's start taking a look at our levels. Obviously, the 21.1550 is going to be a key level. A target, for the open, depending on where we open, is going to be 21.13.25. And then we've got our key trade level at 2106.75. Our naked VPOC at, our overnight VPOC at 2103. Our daily downside ATR target and the overnight low and significant trade area of 2100. I moved it down to 2098. 2098 is the CHVN. It's also, top of this little balance area where we gapped up. It's right on top of that gap zone of 97 that goes down to 95.50. I gotta mark that in. This is the bottom of the gap zone at 95.50. Okay, and then below that, we've got the 88.50, and then our next big target below is going to be down here in the 80.25 with the naked close at 85.75 and naked VPOC at 83.50. Whether that comes into play today, will be based on our hypos. And then above us, we get into this area right here at the 21.19 and a quarter. Value from Friday means absolutely nothing. There was no value on Friday. It just happens. It's gonna show up, but on trend days you always discount value because there is none. You've left value and moved down. We did get a VPOC shift late into the day down here at the 21.30 area, and that's going to be a key target if we do get back up inside of the prior day. There's another LVN here at I'd say 20. I'm going to use 23.75, because if we get above that, then I think we're going to get a shot at the 21.30. And then above that, we've got the other side of that balance around the 21.30 up there at 21.30. I'm going to use 34.75. You could use 31, but it's too close to the balance. And then above that, we've got the 50% of the significant breakout candle. Then we've got the 50% of the impulse wave down, the move off of the all-time high at 42.50. And then above that, you've got 53. And then you've got the range high from Friday and the open up in the 21.58, 21.57 and a quarter. And then we've left. Now, I want you to understand that just because we made this move down does not mean that, get your bear hats on. We got repair work to do that we left above. So whether this is just a move down and we start working our way back up towards this area and the balance that we just fell out of, it's tough to say yet. So just, usually we won't leave this much, repair work near all-time highs. But it is what it is. We've moved down. So what is our main hypothesis? Our main hypothesis today is sketchy because of the fact that we're in this area. We've made a big move. We don't know whether or not we're going to get continuation. So I've got hypos, but they're equally weighted until the market shows me. So my main hypothesis for the day is an open auction out of range or just inside of range. A move up to take out the overnight high, test the 21.19 area, and then find initiative sellers and fail to hold inside of the prior day range. A move down to test the overnight LVN, chop around here, and then push down and give us our first test down into and below the 2100 into the 2000s, with a main target main target being somewhere between 97 and 95.50. So my hypo 1, which is equally weighted with hypo 2, is going to be an open auction out of range, a move up, a failure to get inside and hold inside of the prior day range, find initiative sellers, rotate down, chop, testing the LVN at 21.0675, fail, push through, take out the overnight low, and dip into the 2000s with the main target being in the 97, 95.50, that top and bottom of the gap that we left open. Hypo 2 is an open auction or an open test drive, and then a push down and then come down into the 2103, 2100, maybe even dip down, but find responsive buyers, rotate back up, chop at the range low from Friday, and then push up into the 2120 area, and then maybe a late day probe up into the 2123 area. I don't think we're going to get all the way up to the 31, but hey, we could. And then if we do get up above the 21, 23, 75, and we're looking at a possible trend day, then I'd be looking to come up to here. But that's going to be part of my other hypos. So hypo 2 is an open auction or an open test drive or an open drive, and a push down into the 2103, 2100, maybe dip down, find responsive buyers, rotate back up, and come and chop around in the 20 area, 2120 to 2375, with maybe a late day probe up. Hypo 3 is going to be either an open test drive, an open drive, or an open auction out of range. Failure to get in or failure to hold inside, push down into the 2100, chop down here, and then push through down into the 85 to 83 level, with maybe down into the 80, and get a continuation day down and test the lower side of this thin area of the composite. So make it basically get another trend day down. Hypo 4 is an open auction, out of range, a push down, failure to get below the 2106, maybe even 2103, find responsive buyers, rotate up, chop around in the 20 to 23 area, push through into the 30 area, find price acceptance, and continue back up into these two key levels at 36.75 and 42.50. It's, you know, it's a big guessing game right now, gang, because of the fact that we've made such a move and we're in this, you know, this terrible structure that we did not auction very well. Currently, right now, our Keltner center line is at 2109.75. We did find a little bit of balance down in this area. Move up to the upper Keltner is going to test our Friday range low. And if we break below the 09.75 and move down to the lower Keltner, it's going to take us down into that 2103 area, 2104. It'll be in closer to the 2103 when we get there. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.